Do you ever wonder why like 99% of people have a mortgage on their home? Well, it's all about leverage. So let's break down an example, and I'm going to show you how it's connected to why we buy call options versus buying stock when we're trading in the financial markets. So let's say you've got a $500,000 home. And after you've been in it for a year or two, the value has gone up to $600,000. You'd have a $100,000 profit. Now, if you'd plop down the entire $500,000 in cash, to make that $100,000 profit would be about a 20% return on your investment. But, like most people, what if you put $50,000 down? You did a $50,000 down payment and you borrowed the rest from the bank. The house still appreciates, jumps to $600,000 in profit, $600,000 in value. You still make that $100,000 profit, but look at the return on investment. Instead of putting an entire $500,000 at work, you only had to put in $50,000. So that is now a 200% return on investment. And I'm going to show you exactly how we use this same concept in the world of options trading. So let's break down this concept of leverage and how it applies to investing in the financial markets, and why the majority of the time we choose to buy call options instead of buying shares of stock outright. So let's use Microsoft as an example. And let's say you're looking to make an investment of around $4,000 or $5,000. That's your position size. That's what you're wanting to go put to work. Well, here's Microsoft trading right here as I record this, about $450 per share. So to go get a 10 shares of stock would be about a $4,500 investment. Okay, so that'd be right in line with your position size. So let's work through some math. What if Microsoft, you're feeling bullish, you're feeling good, you think Microsoft is going to continue this trend, and you're right. You grab those 10 shares of stock, and Microsoft over the next month or two just goes marching higher, 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 up to, let's say it's even a 10% move, up to $500 a share. Let's work through some of that math. So again, Microsoft jumps up from 450 to 500. Well, what that means is your 10 shares, you go out and we had invested $4,500. That investment would now be worth $5,000. You would be looking at a $500 profit on those shares of stock. All right, so let's work through that ROI. So you've got a $500 profit on a $4,500 investment. We're talking 11.1% return on your investment, an 11.1 return on those shares. Fantastic, right? Great little move. You got to enjoy that. Microsoft did exactly what you wanted it to do. No one's going to complain about 11%. But let's take that same example and let's go put $4,500 to work on a call option, and we can compare and contrast. All right, so here's an option chain on Microsoft. This is going to show us the pricing of our call options. So if we want to go put about that same $4,500 to work, and hypothetically we see that same $50 move in the stock, let's break down exactly what that would mean for your investment. So here's an option chain. Our calls are over on this left side. And if we come in and we look at this 420 strike price call option, we could come in and buy that for probably around $46. Now, each option contract represents 100 shares. So that's quoted at 46, but we need to multiply that by 100 because each contract represents 100 shares of stock. So cash money, that would be an investment of $4,600. So pretty similar to if we just bought 10 shares of stock, right? So if Microsoft were to move again, trading right here around the 450 mark. If Microsoft were to move up to 500, okay, same move we just talked about if you were owning 10 shares of the stock itself. If it covers that ground, now the delta of this 420 call is about 0.75. So we're not going to dive into that a whole lot. But what that means is if Microsoft goes up $1, the stock, this 420 call option is going to increase by about 75 cents. And as it continues to go higher, that delta is only going to increase. So at a minimum, if we catch that move up to 500, those call options are going to make us about $3,800. All right, so let's bring in the calculator. Let's break that down again. So if we have cash in 3,800, right? And we had the 4,600, but we make a $3,800 profit. Okay, there's our profit, 3,800. That's how much that call option will appreciate. And we put $4,600 into that investment. We're talking an 82.6%. All right, move that decimal place over to 82.6% return on investment. Same move in the stock. Microsoft still going from 450 to 500. We go from an 11% profit to an 82% profit by investing practically the same amount of money in Microsoft if we're feeling bullish. Now, we have a saying around here. Sometimes too much of a good thing can actually be bad. Sometimes people overdo it when they're trading options. So a big part of it is risk tolerance, money management that we teach a lot here at Trader's Edge. But one other little thing I need to point out. The big difference between stock and options is options have an expiration date. At a certain point in time that you know about up front, those options will expire. So when you buy stock, that move can happen whenever it would like. As long as you're willing to tie up your capital in that stock position, you don't care if it moves in a week or a month or a year, right? It's just opportunity cost if it takes longer to see that move. With an option, this example that I laid out, these are October expiration. Here it's June 21st, so we're talking 4 months out in time. So if Microsoft were to make that move within the next 3 or 4 months, you see that 82% return on investment. Now, a lot of times we don't like to hold over earnings because it can just move and do so many volatile things. So typically with our style of trading, buying a call option, having kind of that shelf life isn't a big deal at all. We make sure we position size correctly. We make sure we time out and plan out exactly how long we think we might be in this position so we get the right expiration. And then we can go for that 82% type return on investment versus the 11% return. So hopefully this gets you a little excited and optimistic about learning the world of options trading if you're not already involved in understanding it. Roll up your sleeves, get to work. There's a lot more videos here on our Trader's Edge Network channel that can help you start to master the world of options trading. I hope this was helpful, and we'll see you soon.